Good evening, good afternoon, good morning, and welcome to this live webinar on trading Malaysia. My name is Nick Lord, and I'm the moderator of today's event. Malaysia has weathered the storms of 2022, probably better than many countries. Economic growth in Q2 at 8.9% was the highest in the ASEAN region. Foreign direct investment continues apace. Indeed, it was double the size in the first half of this year than it was in last year. And behind this strength lie many reasons. Malaysia has an open economy, an educated workforce, but also Malaysia's strength and depth in commodities. So today we are going to discuss how traders can take part in this exciting market. I am joined today by a very distinguished panel who come from a local prop trading firm, Iceberg, from the local exchange, Bursa Malaysia, and from Avelicom, the international low latency provider. Allow me to introduce them, and I think in alphabetical order would be fair. So Andrew Tan heads the investor development team of Bursa Malaysia Derivatives. He has been instrumental in the recruitment, amongst others, of prop trading firms, funds, and professional traders into the Malaysian derivative markets. He brings with him over 20 years of exchange experience in the equities and in the derivatives market. Next is David Ng, a full-time proprietary trader with Iceberg X, a local proprietary trading firm based in Kuala Lumpur. He has done extensive research in the commodities and indices markets. He currently trades the Malaysian index and the crude palm oil futures market. He also provides frequent market commentaries to local media like The Star, Business Times, and The Edge. Gabriel Bassas is VP for EMEA and APAC at Avelicom. He was one of the earliest players in the low latency network and data solution space for capital markets. He's delivered numerous projects across EMEA and Asia Pacific for traditional derivative traders, banks, market makers, and increasingly for native crypto trading firms. And last, but by no means least, Ryan Long is the head of commodity derivatives at Bursa Malaysia Derivatives, where he is responsible for improving and expanding the commodity product offerings of the exchange. Ryan brings more than 20 years of experience in the palm oil market. Over the years, he's assumed different roles within the industry in Malaysia and in Singapore, including physical broking and trading, institutional futures dealing, commodity risk management, as well as prop trading, prior to joining Bursa Malaysia Derivatives in August 2021. So that's your panel. We're going to have a very interesting discussion today. The structure will be basically three parts, following a top to bottom format. Firstly, we will look at how the Malaysian economy is structured, especially its commodity base. Then we will look at how the market is structured. We'll look at the investor base, the liquidity profile, and links with other markets. And then we'll delve into the details of what it takes to successfully trade the Malaysian market. So that's probably enough for me. Let's start the discussion. Ryan, perhaps you can start by giving us an overview of Malaysia's economy and perhaps say why it is doing so well in comparison to other markets at the moment.
Well, first of all, I do not want to sound like an economist. I'm really not one, right? In a nutshell, Malaysia GDP growth estimate is close to 6% this year. 5% projected for 2023 and 4.5% for 2024. World's GDP is expected to expand by 3.6%, thereabout, right? Just to provide a bit of context. Moody's report recently highlighted that Malaysia is one of the few economies in the world that will benefit from high commodity prices, other than countries like Colombia, Saudi, Indonesia. Right, for Saudi and Colombia, obviously it's crude oil. Right, for Indonesia and Malaysia, it's palm oil. Right, so the four major commodity produced and exported by Malaysia are rubber, crude oil, natural gas, and palm oil. Right, last year, 2021, out of the total exports, palm oil contributed 6.1%, oil and gas 4.6%. So in combination, that's more than 10%. Year to date, September 2022, Malaysia palm oil export are valued at about 100 million ringgit. Yeah, that's about 21 billion US dollar at current exchange rate versus 71 billion last year. So that's showing a year-on-year hike of about 42% according to numbers published by the Malaysian Palm Oil Board. So high commodity prices, they are basically boosting Malaysia's export receipts and government revenues. The improved balance sheet will encourage continuous infrastructure spending, which will eventually help fuel the economy.
Great. David, do you have anything to add to that about, your sense of how the Malaysian economy is structured and how it's performing at the moment?
Yeah, I kind of agree with what Ryan has mentioned. I think generally Malaysia is very commodity driven. So in a sense that, we saw how commodity prices actually rallied, especially crude oil, we saw negative price for the first time in history, and it actually rebounded, right until $100 per barrel. I think that tremendous growth actually helped countries like Malaysia, especially we are very export driven when it comes to commodities. So palm oil, for example, if you are trading the market, you're trading the space, you probably have noticed that prices actually rallied close to historical high this year itself. So I think it goes to show that the commodity rally, the price rally that we're seeing is actually fueling the growth in the Malaysia economy in general.
Great. And how does that filter down into the underlying economy? Is it, you say it's 6.1% is palm oil. And that actually sounds as if the export market is much more diversified than people might have thought. They probably might have thought it was just limited to crude oil and palm oil, but it's that's not a single commodity that is dominating the entire economy, is it?
Well, not exactly. If you look at the entire export space, more than 50% of the Malaysian export comes in the form of electrical and electronics.
Right. Yeah. Okay. That is very useful. Thank you. So let's talk about how traders can get exposure to these economic trends, especially via the derivative markets. Andrew, I'd like to bring you in here, if that's okay. Can you give us an overview of Bursa Malaysia derivatives and the Malaysian derivative market in total?
Okay. Thanks, Nick, for the questions. Just for everyone, information that the Malaysia derivatives market started in the 1980 with the introduction of Kuala Lumpur Commodity Exchange. So our derivatives market actually started in 1980, and there was another two exchanges that were established in the 90s. They are the Kuala Lumpur Options and Financial Future Exchange, as well as the Malaysia Monetary Exchange. And all these exchanges were merged in early 2000 to form Malaysian Derivatives Exchange. And this Malaysian Derivatives Exchange subsequently was renamed to Bursa Malaysia Derivatives, which we have currently. So in Malaysia, there's only a single derivatives exchange, which is Bursa Malaysia Derivatives. In 2009, we actually entered into a strategic partnership with CME, Chicago Mercantile Exchange, and we have moved or migrated all our products, trading of all our products, to CME Globex in year 2010. So for our commodity contracts, we have the palm oil complex, we have the gold futures, as well as the tin futures. In addition to the commodity contracts, we also have index futures on the main composite index. And the most liquid commodity contracts on our market would be the futures on the crude palm oil, or in short, FCPO, which is the global price benchmark for the CPO market. Currently, our market current ADV is about 78,000 contracts, and open interest is about around 230,000 contracts. We also introduced night sessions, the T+1 night sessions, last year, December, and these T+1 night sessions operate from Monday to Thursday. So there's no T+1 night sessions on Friday because we want to give our traders a night out before the weekend starts, after a heavy trading week.
Great. And can you give some indication of what the investor base is for certainly on the derivative side, more than the conventional equity space?
Okay. So as I mentioned just now, the most liquid contracts in our market is the futures on crude palm oil. This contract itself, the ADV is about, the average daily volume is over 65,000 contracts. It's our most active contracts. And the open interest is around 200,000. Our second most liquid contract will be the FKLI. For the market demography, the latest market demography is made up of 53% of foreign participation, 47% of domestic participation. Whereas for the crude palm oil contracts, the futures of crude palm oil contracts, the participation mainly is from the foreign participation is about 48%, and the domestic participation is 52%. For the crude palm oil contracts, the participation from domestic ranges from the domestic institution, retail, as well as the local participants. So 10% from the institution, 32% from the retail, as well as 9% from the local participant. Local participants are the individual professional traders in our market.
Okay. And do the end users of palm oil, so the big food groups internationally, big importers from, let's say, China, do they use the contract for hedging purposes, or for do they actually sort of forward order via the contract? Is it fungible into the underlying product?
Okay, because our futures on the crude palm oil is physical delivered, so yep, it facilitates the end user or the physical traders to use it for hedging purposes, and they ask delivery in the market, in the futures market, because it's physical delivered. I believe it's about 3% of our contracts are physical delivered sportsman, so it's not a lot, but there is definitely underlying users who uses this contract.
Yeah, interesting. Ryan, perhaps you can let us know, what do foreign this 53% of the market, let's say, who are foreign investors, what do they find when they come to Malaysia and when they start trading these Malaysian contracts? How do you characterize the market?
I would say we have the global benchmark being listed on Bursa Malaysia, right? I would like to add to what Andrew has mentioned earlier. We actually offer the most actively traded crude palm oil futures contract in the world, right? Approximately 16 million contracts are transacted annually. So that is about 5 times of the global palm oil production. Yeah. In other words, it's also about 66. Andrew mentioned 65,000 contracts traded on a daily basis. Malaysia is the second biggest palm oil producer in the world. We produce about 18 to 19 million metric ton of palm oil a year. Like I mentioned earlier, again, we actually take pride that FCPO, that is the contract code for our crude palm oil futures contract. It is a global benchmark. And last year's data actually showed that 54% of the trading volume was contributed by foreign institutions. So that shows we see a lot of participation from players based outside of the country. Yeah, we are also proud to say that this is the only commodity futures contract with sustainability and traceability requirement mandated for its physical delivery process. Right. So all crude palm oil physically delivered against our futures contract has to come from a source, or rather a Malaysian sustainable palm oil certified source. Yeah. So you can basically trade the contract up to 36 months ahead, 36 months forward. Currently, also mentioned by Andrew earlier, the open interest is slightly above 200,000 contract. And we have open interest all the way up to May 2024 already. So what I would like to reiterate here is, in fact, it is a well-received futures contract, even for foreign participants.
Great, thank you, David. I'd like to bring you in here as the voice of an actual trader. What are the characteristics that you would say are of the FCPO? Let's focus on that contract in particular. How does it trade? Are there correlations? What strategies can you use to make money? How do you trade it?
Yeah. No, I think we trading CPO market, FCPO, in fact, is very similar in trading other type of commodities in general. Firstly, it has a seasonal pattern. So if you're someone that is a fundamental trader, you read a lot of news and whatnot. Clearly there is a period where production tends to pick up, and trading FCPO contract on Bursa Malaysia is in a way is very helpful because we have a lot of data that you can work on that's published by the authority on a monthly basis. So in a sense that we get a lot of very timely data in order for us to do analysis, and that will help us in informing our view and direction of the market. So I would say is firstly, we have reliable data. So in a sense that we can form our judgment. I think secondly that trading palm oil market itself is actually trading the vegetable oil. Vegetable oil is such a complex market. We have a lot of other vegetable oil in the market, say for example like sunflower or soybean oil. So all these markets itself, it does have a relationship with trading palm oil. So if you are someone that's trading on a palm oil market, you might have do a bit of analysis, looking into the soybean oil market because these two products are quite interrelated. So when it comes to trading the palm oil space, sometimes we do look at the soybean oil market as well. So I would say, being a trader in the market, commodity, it always has a season, and it helps when you have good data. And I think secondly, as what mentioned by Andrew and Ryan, the market is very liquid. So there's no issue of having slippage, no issue of getting it out, especially if you talk about future contract, which is you can trade contracts as like 6 months or 8 months forward. Even those contracts, they have volume as well as open interest. So I think that helps if you're looking for arbitrage opportunity or you're looking for like a bit more complex trading strategy, which involve like calendar spreads and whatnot. So I think all in all, it's just trade like similar with any other commodities. And there's certain analysis like looking at external markets, especially the soybean oil, does help whenever you trade the palm oil market.
Okay, you mentioned there's a lot of data specifically, and that there's a season, and what are the types of data that you follow on a day-to-day, month-to-month, and year-to-year basis? And when is the season? I imagine is there a harvest?
Yeah, sure. Palm oil itself is actually quite an annual crop, so we don't have like harvesting. Once you plant, it's an investment for 30 over years. So it continues to produce year in, year out. So there's always a cycle. Normally production in Malaysia tend to pick up around March, April, and it'll probably last around the peak of production probably around September, October. That's where Malaysia itself will probably towards the year end, a lot of people will go. They'll slow down harvesting cycle because a lot of people will go on holidays. There's also monsoon, which is a weather impact. So all this will come into play. So itself, if you just look at data that's published by Malaysia Palm Oil Board, which is the authority in regulating the palm oil industry, in a sense that when you look at the data, you're able to form. You tend to have a pattern whereby you tend to see production tend to be weaker towards year end. So that's how if you trade the market, you probably will notice that towards year end prices tend to be a bit stronger because of the seasonality that's in play, especially when it comes to demand and supply.
Okay, so more production and prices actually go up. Higher supply, higher prices.
Yeah. I'm sorry. I mean, towards the end, normally you expect lower production, so that's why prices tend to be a bit more supported.
Okay, good. Sorry, I was just checking that. Gabriel, I'd love to bring you in here. How would you sort of characterize Malaysia's linkages with the rest of the world? I know that obviously as part of CME, Bursa Malaysia Derivatives, is part of the Globex trading network. Perhaps you can bring us up to speed on how the connectivity between the rest of the world and the Malaysian exchanges looks from your point of view.
Yeah, I mean, a very good question. And Velecom seem to have a very good visibility on this in that we provide connectivity for our clients who have demands or requirements for enhanced electronic trading systems. So we have a keen eye on in terms of geographical options of how to get from one point to another point. And having spent a bit of time in Singapore recently, I noticed there's a lot of demand for connectivity into Malaysia, connectivity into like places like Bangkok as well. Southern Asia in general is I would say is on the rise. You're seeing a lot of demand for people moving there. I think in terms of how the region has dealt with the recent events. I think it's opened up and it's allowed for international business to flow. And I think now you see, I would say, Singapore really as the hub for Southern Asia, which allows you to access markets like Malaysia, like Bangkok, like Vietnam, like Hong Kong, like China, Mumbai. It's very, very centrally located, and it's quite an important market, I would say, from a connectivity perspective. And we've done a lot of work in terms of optimizing. I think it's one of the mandates that Velocom does for most markets globally, is that we spend a lot of time looking at how we can get from one market to another. We're doing a lot of analysis on sea cables, on backhaul fibers, on which conduits we'll use to get from one point to another. So we spend a lot of effort in terms of building and designing our network, and I think we're pretty comfortable with the networks that we've designed into Malaysia at present. We also build resiliency into the network as well as standard, as you'd expect from a telecommunications company. So in terms of the arbitrage opportunities, as mentioned earlier, a lot of customers will use Globex, CME Globex, to get into Malaysia, and I would say that there are opportunities in that regards, because CME will go out and they'll build, then design their own backhaul networks, and then Velocom will build their backhaul networks, and so now you have this arbitrage of which backhaul network gets you market data from A to B quicker. And being the newest purpose-built fiber optic network for the capital markets community with the mandate of building low latency networks, I would say this puts Velocom in a very good position to bring either connectivity from Singapore to Malaysia, or from there are other markets as well where you can do arbitrage opportunities such as exchange, Malaysia to CME, of course, which was mentioned earlier. So that's really driven us to major markets quite considerably. We've obviously co-located
you established a POP, or was it even a co-location last year?
In the exchange, we're in the exchange right now, which makes it very easy for customers who are already in carrier grade locations such as Equinix and CME to be able to use the Velocom network that's already on net and access Kuala Lumpur quite easily and fast. So if anyone's interested in looking at optimizations for network access into Malaysia, definitely reach out to us. We'll be happy to share some interesting numbers and figures as well.
Great, thank you. Well, I think before they do that, they want to understand the opportunities and how to make money in this. So I want to bring David back again, if that's okay, and ask about, are there any other palm oil contracts, derivative contracts in other exchanges around the world? And if there are they correlated with Malaysia?
Yeah.
Or different price, can they be arbitraged?
Yeah, I think as what mentioned by Ryan just now, I think if you just look at palm oil, the global price benchmark itself is you don't look other place other than Bursa Malaysia. Obviously, there's also other futures contracts that's derived, other palm oil futures contracts that's on other exchanges. But I would say that first, I think the access to it is slightly more difficult, and I think secondly is obviously there's certain relationship that we can derive. For example, if you just look at if you're trading on a Bursa Malaysia palm oil, you can obviously link the palm oil contract on the Thailand exchange, which is in China. So obviously there is a relationship between both commodities. But ultimately, I think when it comes to access, the traders' access to the market, I think Bursa Malaysia itself is indeed a very easy accessible market. I mentioned, I think the reasons being is because the data, if you want to analyze data, you get all the data that you need, and itself I think is traded on a global international level, so it's technically putting a global benchmark pricing. So pretty much you have access to both the Western audience as well as the Asian audience as well. So in a way, I think it gives you that kind of opportunity. But obviously, I think when you trade as a product itself, you can use that interrelationship as a direction or a view to trade the Malaysia palm oil. But obviously, there's also other external factors that actually does impact prices as well.
Okay. Are there any correlations that you can see as opposed to sort of differences?
Yeah, I think one of the common relationship that people always talk about palm oil with other particular market is definitely the soybean oil, which is on the seaboard market. So if you just look at both the products together, you can really see that they both move quite in tandem. And if you're thinking of doing a spread, which is normally market participants will look at the spread between the palm oil and soybean oil on the seaboard market. Currently the spread is actually on historical high basis. So if you are trading on a mean reversion strategy, normally you'll be like, oh, since it's historical high, there'll be a good opportunity for you to look at whether this spread will eventually be normalized. So I think that's in a way gives you an opportunity. And when you look at palm oil, for example, I think soybean oil is definitely a clear product you can obviously look at when it relates back to palm oil. And obviously other palm oil markets, like I just mentioned, the Thailand palm oil, I think that's also a good product to look at when it comes to comparing Malaysia palm oil with other palm oil related products.
Okay, how about with the exchange? So with the index on the KLSE, what's the relationship between the index future and then the FCPO? Is there is palm oil so intrinsic to the underlying Malaysian economy? Do they move in tandem? Do they move totally differently? Perhaps Andrew, you might be able to shed some light on that.
Okay, for the palm oil prices is driven by the global demand and supply for the edible oil, but for the KLSE composite index, the main stocks or the component stocks are mainly the financials or the banking stocks. So, but we do have an index on the plantation sector. So if you were to look at that index, it will be correlated very closely with the palm oil prices, because most of the constituent in that plantations index is the plantation company.
Yes.
So that would give you a more correlated relationship as compared to the main index, because the main index is mostly banking stocks. So
okay.
Yeah.
Okay, and they would be, so what, the local conglomerates like Sime Darby or LOI, or who would they be? What names should we look out for?
Yes, Sime Darby, Felda, FGV, IOI, United Plantation. Those are the big names in the plantation sector.
So it's a good spread of equity companies that are then put in an index, and then you can trade that index against the underlying commodity.
Yes,
future.
Correct.
Very interesting indeed. Ryan, perhaps I could bring you back at this point, and we can discuss, I suppose, any of the sort of practicalities that foreign investors might need to know about in terms of either settlement procedures or taxation. Is there anything that they should know when entering this market? The actual practicalities of trading and taking part. How can they access it? Can they access directly? Do they need to go through a local broker? Is there anything you can tell us about this?
Well, any foreign traders can access the Malaysian market via an overseas trading participants. That's the term we use for brokers in Malaysia.
Okay.
Right. So in terms of practical, maybe I'll leave that with Andrew, if you may.
So there's no capital gain tax in Malaysia. So if traders make money, they can repatriate their money back to their home country. There's no taxes on money to be repatriated back to their home country. And also to facilitate foreign traders, for our initial margin, in addition to ringgit, we also accept 8 different foreign currency as initial margin. So the 8 foreign currency are US dollar, Euro, Pound, Aussie dollar, Singapore dollar, Yen, Hong Kong dollar, as well as renminbi. So it's the major currency.
Yeah.
So we do accept that as a initial margin. But for the day-to-day settlement, it would be based on the currency of the contracts. So for our CPO, for our futures on the crude palm oil, it will be Malaysia ringgit. That is only cover the day-to-day settlement, the variation margin. And also to just quash, I think one of the highly likely asked question is there any capital control in Malaysia? There is no more capital control in Malaysia.
I mean, that went a while ago, didn't it? It's not, I mean, it obviously,
Yes.
when it was put in 25 years ago, it caused a lot of noise. And maybe have forgotten that those controls were lifted a long time ago.
Yes, it was lifted a long time ago, but there are still people who still have this impression that there is capital control in Malaysia. So we just want to kill off that question. There's no more capital control in Malaysia.
In fact, we have a global banking group who is also a clearing and trading participant of the exchange. Is it okay to mention the name? The banking group starting with JPM is actually a clearing member of Bursa Malaysia, right?
Yeah. Okay. And I understand there's some incentive programs, aren't there, for foreign participants in the market?
Okay, so we do have an incentive program for the proprietary trading firm. It's not limited to Malaysia prop firm. It also open to foreign prop firm. It's a monthly volume threshold incentive program, whereby if the firm, as long as the firm meet the monthly volume threshold, they will be entitled to a fee rebate or discount. So for the futures on crude palm oil, the volume threshold is 10,000 contracts per month, as well as for the FKLI is 3,000 contracts per month. And any new entrant to this program will be given a 3 months volume threshold waiver. So this is to facilitate them to adjust their trading strategy. So if any of the participants wants to find out more, please do contact us. We will be able to share more details as well, have a more detailed discussion.
Sure. And when did that incentive program come in? How successful has it been?
Yeah, it has helped us to attract a lot of prop firms because as normally prop firms want a lower cost. So the exchange is doing our part to lower the trading costs. And also, I think some of our broker also play their part. So this is to provide a lower trading cost for this category of client because we know that they trade in volume. So they are not a hedger, so they will be trading day to day a certain size. So we are trying to help to reduce their costs so that they would be able to make the necessary profit.
Yeah. Good. The higher the volume, the lower the cost.
Yes.
Goes back to what you were saying, Gabriel, which is something I think, that we've seen in a number of different developing markets over or certainly tier 2 markets, should we say, over the course of the last few years. The volumes are good, even though maybe the performance of the underlying stock exchanges garner all the headlines. Actually, from a trading point of view, the volumes are strong and the interest is very strong. Can you give us maybe an insight into what you've seen about the interest in traders, global traders, accessing these new markets?
Yeah, I would say that the current volatility in the markets right now is creating opportunities for traders, regardless of the geography. So we're seeing demand increase significantly since the last 2 years. We're seeing opportunities in new markets. We were talking about Saudi Arabia recently. The new Tadawul exchange is due to go live in the new King Abdullah financial district. So we're seeing a lot of demand for financial institutions in that location. Brazil as well has been on the roadmap for a long time. We've done some significant work in terms of building through very specific interesting path through the Brazilian jungle to provide the lowest latency into Brazil. But what else is China is constantly being discussed. We mentioned earlier Bangkok as well. Malaysia, Vietnam within Southern Asia really is in high demand right now. So there's things going on all over the place. Johannesburg, Istanbul as well. I could go on. There are demands all over the place. But I would certainly say that the volatility in the markets is certainly for electronic traders has seen the increased demand for that.
Okay, and each local market though is still it's very much its own beast. And they march to their own drum. we have a question from the audience, which I think maybe sort of comes into this as well. We mentioned that 32% of the market is retail participation. Is it all local retail, or are there international retail as well, I suppose, or regional retail?
Let me take that question. Basically, the local retail. That means it's Malaysian retail. It's not the foreign market retail.
Okay. And anyone who's spent time in Kuala Lumpur knows that the financial district is very developed. And I believe that everyone has, through the national pension schemes, has some form of exposure to financial markets. And there are lots of people have local broking accounts. It's a very well developed local market, I suppose, is what I'm trying to ask.
Well, I would say the pension fund is one of the biggest, if not the biggest investor in the local equity market, the stock market. So anyone who's got pension, who has got in the account, has got exposure to the stock market.
Great. You mentioned as well that the three commodities are obviously crude palm oil, gold, and tin. Perhaps you can tell me a bit more about the gold derivative contract, how that's priced, and maybe what trading opportunities might exist there between gold and the underlying, the contract and other contracts and other exchanges. How does that all work?
Gold contract was actually relaunched recently. It was relaunched last month, September. It is the first quanto contract that the exchange launched, or rather introduced. Right, it is settled based on London morning fix. Okay. Right, and what I meant by quanto contract is the pricing of the contract is based in US dollar per troy ounce, but the day-to-day mark-to-market and settlement of that contract is in ringgit Malaysia. It is based on a 40 multiplier, right? If you are seeing the price being quoted at 1600 currently, just for an example, what you do is you just multiply that with 40. That will be the notional value of the contract in ringgit Malaysia.
Right, great. So I think we're nearing the end of the main session of this. David, I'd like to bring you back in and say, from your perspective as a trader, what are some of the idiosyncrasies of the Malaysian market, and maybe some of the challenges that you might have faced when trading Malaysia and how you have overcome these? Give us some personal stories.
Yeah, sure. I think when I first started trading full time in this industry, I think trading Malaysia palm market is quite challenging at first, given the fact that when I mentioned the relationship between palm oil and soybean oil, for example, soybean oil usually trades very actively in the non-Asian hours. So if you are holding a position on a Malaysia palm market, you have some overnight news in US, and that would definitely affect market the next day. So in a way, it's kind of disrupt your trading strategy in a sense. You don't have that continuity because the market only operates as those days is from 10 a.m. 10:30 a.m. in Malaysia time to 6 p.m. And that's it. So I mean, thankfully that Bursa Malaysia actually look into having a night session, and I think the night session is actually gaining momentum with the increasing volume. So it helps with if you are looking at markets like in US, especially you are having palm oil position, you tend to have probably a good opportunity to look into the bean oil market as well, especially when during the night hours or usually the Western market. I think other than that, if you just look at other factors like crude oil, to a certain extent it does have an impact to palm oil as well because of the biodiesel mandates. Now everyone is talking about climate change, the drive of green energy and whatnot. So obviously, I think palm oil, being a very important feedstock in biodiesel, I think it's going to be quite prominent going many years ahead. I think that's gaining momentum. So in a sense that if you are trading the palm oil market, you have to acknowledge that crude oil does have an impact as well. So we have multitude of factors that's actually coming into play. So we don't see that kind of strong relationship in years before, but I think as we know, as the drive, the narrative of green energy is getting stronger, I think that's going to be quite prominent in the years to come. So I think these are the few things that is if you're trading a market, you just have to be a bit more careful of. And obviously, you just look at prices itself. Palm oil prices in Bursa, Malaysia this year, I think is very volatile. We hit a historical high of close to 8,000 ringgit per ton. And right now you're trading about 4,000 ringgit. That's in a span of about 7 to 8 months. I think that speaks a lot about volatility. So it's true enough. I think the market itself is very volatile. As a trader, it's definitely a good opportunity in a sense if you get it right. Yeah.
Ryan, do you see? How do you see? So let's stick to the FCPO contract. Do you have any internal predictions for how big it could get? How intertwined with other contracts it might become? What are your sort of internal projections?
We do not have any in-house projection. We don't have a price forecast or anything like that. But I would like to say that the supply and demand dynamics of the market actually dictates price volatility and price direction of palm oil, right? High stock, low price, low stock, high price. My personal observation, the inverse correlation of price versus stock level is close to like 80%, right? So market participants usually take cue from the Malaysian Palm Oil Board monthly supply and demand statistics. They use that to plan their trades. MPOB, that's in short for Malaysian Palm Oil Board, they release monthly statistics of the Malaysian palm sector on the 10th of every month. So this is a small tip, to share with everyone. So market players also take hints from other periodical production published by various palm oil association like the Malaysian Palm Oil Association and maybe the Palm Oil Miller Association, right? And of course, the export numbers from the shipping surveyors. In order to put it simply, if you are able to predict stock level, you are able to predict the price direction of palm oil.
Okay. And are there any sort of environmental factors that people should take into account? I know with some of the other commodities that La Nina and sometimes La Nino do have a big effect on production and therefore on stock levels. Is that something that affects palm oil as well? Or is palm oil sort of quite resilient in the face of some of these climatic issues?
I think weather is definitely an important play when you talk about commodities. Same goes for palm oil. I think the question the question of La Nina and El Nino, the adverse events, is always going to have impact on prices. But again, I think if you see, trading palm oil is actually quite data sensitive in the sense that's what mentioned by Ryan. We have a lot of data coming in every monthly. So in a sense that traders will really have to anticipate whether they come up with their own projections or whether they look at forecasts by other relevant agencies. From there they plan the trade. Weather is definitely going to have an impact, but the thing about weather is very difficult to predict. So even though we have we are in the onset of a La Nina event, normally we witness prices tend to rise because the effect it has on production. But having said that, sometimes whether it takes a longer term to materialize, so prices doesn't really react that much, but rather there's other factors that's actually having more important impact at that point in time.
Great. Well, look, I think we, unless there are any last questions from the audience, I think we'll take this opportunity to have a last go around the panel to just give your pitch for why trading Malaysia is an interesting market and how Malaysia fits into maybe a more global trading regime. Gabriel, perhaps you can start with the kind of global perspective.
Yeah, there are participants on this call from Asia, Europe, America, and I think that's one of the unifying things that technology enables. And part of the infrastructure that Velocom provide. So ideally, most participants on this call are going to be in the trading space, and we'll have infrastructure in common data centers such as London, New York, Tokyo. And so therefore, if you are in the kind of, if you've been excited by some of the comments that have been discussed today, the Velocom network is easily accessible to any one of these market participants in global markets. So it's just a case of a cross connect, and you're officially now on the Velocom network and have the ability to now utilize the low latency network to access connectivity, market data, services into Malaysia. So definitely, if you're an international investor in some of these, faraway markets such as Europe or America, definitely we have some capabilities for you. And whether or not you're domestic to Asia, Singapore seems to be a really good hub for accessing connectivity into Malaysia. So we're definitely keen to speak with new clients, and any existing clients. We're happy to discuss specific numbers that really show the value as to why Velocom.
Sure. Andrew, perhaps you can give us Bursa Malaysia derivatives point of view and how you fit into the global trading network.
Okay, so as you mentioned earlier, all our products are traded on Globex, so access is easy because there's Velocom can provide the access. So what the traders need to do is fairly simple. You just need to strike a relationship with your clearer. If you already have a clearing relationship with any of the FCM, just check with them whether they can provide you with access of the clearing arrangement. Once that is done, basically you can start trading. And our contracts, there's volatility in the FCPO, so it's very volatile. There's opportunity there, as highlighted by David as well as Ryan. So and we also have facility like initial margin is you can lodge in your own currency if you are from US, Europe. So the major currencies are accepted initial margin. So it's fairly simple to access the market.
It's all there. Okay, Ryan, what key messages would you like to leave the audience with?
Well, I would say we have listed calendar spreads where you can easily execute calendar spreads, trades, and all that. Butterflies, you can trade butterflies, which are also listed. We have also recently, we have just listed the inter-commodity spread. In fact, we have 2 crude palm oil futures contract listed on the exchange. We, FCPO, that is the conventional, or rather our key futures contract, whereby the physical delivery is to be performed in the Peninsular Malaysia, right? We launched East Malaysia futures contract, which is also a crude palm oil futures contract with physical delivery in East Malaysia. So we have got 2 futures contract with physical delivery in 2 different regions in Malaysia, right? Peninsular Malaysia and East Malaysia. I mean, if you have time, have a look at the map and see how the Malaysian map looks like. So we have listed this inter-commodity spreads whereby you can trade the price differential between the 2 regions, right? You can do that with a lot of convenience, I would say, because it is a listed inter-commodity spread. You don't have to execute the trades separately. You can just do it at the click of the button. So my key message, you don't have to just look at the market as in just bullish or bearish. You can look at other strategies like spreads.
Yeah, great. David, last word. Here's your chance to talk your book. What do you see on the horizon?
I definitely have advice for the audience, if you are trading, whether it's any commodities, be it whether it's palm oil or any other commodities, is trade with the trend. Trend is a friend. If you just look at how we have seen prices been this year itself, especially for the palm oil market, we hit historical high, and right now we are almost 50% retracement based on the chart level itself. Now I'm not gonna like forecast where prices is gonna go, but rather I think it's if you are someone that's trying to assess the market and if you are someone new to the market, in fact, I think that's what Ryan mentioned, looking at data and all this, it does help in certain ways in trying to give you the trend direction where the market might head. As with other commodities, it has a seasonal pattern. I think palm oil itself is actually quite, the prices tend to coincide with quite a good seasonal pattern. So in a sense that it gives a bit of credibility when it comes to looking at, are we entering into a low production period? Are we entering into high production period? By that sense, we are able to gauge where prices might go. I think in the sense that also Bursa Malaysia itself, the market itself is actually very liquid in the sense that it gives a lot of opportunity. If you're looking at a bit more complex strategies like calendar spread, which is I often use as part of my trading arsenal. So calendar spread, the exchange itself has a listed contract on the calendar spread. So itself is a very good opportunity for those traders who are thinking of using a lesser risk but trying to capitalize a bit more gain. So I think I would say that the market itself is very open in a sense that it's very vibrant when it comes to using different type of strategies that allow the traders to capitalize on different type of opportunities. So in that sense, I think be more open. If I'm not traded a palm oil space, try a hand at it. And this kind of volatility, I think you probably might not witness for a period of time, especially where we are right now.
Well, that's a fantastic note to finish on. I think some great lessons there. So Andrew, Ryan, David, Gabriel, thank you all very much indeed. Thanks to the audience for participating and for the questions. I hope this has been useful. It's been fascinating for me. And we wish you all the very best. And that concludes today's proceedings. Thank you.